Hi guys, so this is the next video in the chapter 13 series. So today we'll be looking into calculate the break-even point comprising the total revenue and total cost. Let's start with looking into fixed cost. The cost which up to a certain production level doesn't change with the number of units produced is known as fixed cost. Example, rent of the factory, etc. Fixed cost doesn't change even if there is maximum capacity produced or not produced at all. Variable cost. The cost that changes with the number of units produced is known as variable cost. Example, direct material cost, direct labor cost, etc. Now the total cost. The sum of the fixed cost and the variable cost is total cost. Total revenue. The revenue that businesses receive from selling its product in a specific period of time is known as total revenue. Total revenue equal number of selling units into selling price per unit. Contribution. The contribution can be calculated by subtracting variable cost from total revenue. The contribution can be calculated as total contribution and unit contribution. Profit. Profit can be calculated by subtracting total cost from total revenue. Break-even point. The production or the selling level at which a business receives neither profit nor loss is the break-even point. At this point, the total revenue is equal to the total cost. The selling units or the production unit of this point is the number of units of break-even point. Break-even point can be represented by an equation as well. Now let's look into an example to calculate the BEP. The production volume of a certain company's product is 1000 units per month. The other relevant details of that product are as follows. The selling price per unit is 10, the variable cost per unit is 5, the fixed cost is 3000, the expected units of production is 800 units. Now let's apply the formula BEP equals total fixed cost divided by contribution per unit. Now here the total fixed cost is 3000 divided by the contribution per unit. So that is 600 units to attain the BEP. Now let's look into the contribution. So let's apply the contribution formula. The contribution per unit equal the selling price per unit minus the variable cost per unit. So in this case, the selling price is 10 and the variable cost per unit is 5, which would result in a contribution of 5 per unit. Now let's look into the benefits and limitation of BEP. Benefits of the break-even point analysis. Ability to use as a controlling instrument for cost, profit and volume in business. Useful in production planning as well as in determining the price for the product. Ability to find out the profit or loss at various levels in production or turnover. Ability to identify the safety margin and sell to that level or beyond to avoid any losses. Limitations of the BEP. Though the BEP analysis is important for short-term decision making, it is not successful in using for long-term decision makings. This is because in some sales, we might need to incur losses initially to capture the long-term contract. The limitation made through the assumptions at the break-even point analysis. Example, though the fixed cost doesn't change according to the production or sales in short period, it can be changed with a long period due to expansion of places for storing, for more production, etc. Difficulty in applying if the business has multiple products, and it also ignores the qualitative aspects of the business. So that's it with this video guys. Please do like and share to learn and let others learn. Thank you.
Created using Powtoon.